Hi, I'm John Geraci, and I'm here with Sarah Goss today. And we're here to talk to you about some of the changes with respect to the financial reporting for nonprofit organizations. And Sarah, if you could just start, I guess, by telling us what's the biggest change that's affected the nonprofits in this most recent update.
So there's a lot of new disclosures that are required, really just to enhance the transparency of the organization and provide more useful and understandable information to the board of the directors, the donors, any of the users of the financials.
Okay. And when you say the financial statements, there's two elements of the financials. There's the face of the financial statements, as we refer to them, which has all the numbers. And then there's the footnotes or the disclosures, which has a lot of the words that sort of describe what's in the financial statements. Just starting with the face, which is the numbers, what changes are occurring with respect to that?
Sure. So the biggest change you'll see on your statement of financial position is there used to be net assets that were unrestricted, restricted, temporarily restricted, and permanently restricted. And now you'll just see net assets with donor restrictions and net assets without donor restrictions. So anyone that doesn't have a financial background, this is much more understandable to them. But It either has a restriction or it doesn't have a donor restriction.
That makes sense. I think that simplifies things for everyone. And then what about the footnotes and the disclosures? What's changing there?
Yeah, so there's a couple things there. The biggest thing is that a statement of functional expenses is now required for everyone, not just health service organizations. So you can either disclose that on the face as its own statement, or you can put it right in the notes. And in the notes, you also have to allocate, or you have to disclose in long form how you allocated the expenses.
That's a big change.
Yeah, so if you have salaries, you can disclose, usually it's time and effort, or rent is based on square footage, whether it's programmatic or administrative. And then you also have to disclose how you're going to meet your general operating needs in the next year. And this is meant to show if there are liquidity issues at the nonprofit organization.
Good. So a little bit of extra work, but I think it makes the financial statements more meaningful for the reader. So that's all good. And when does all this come into effect?
So years beginning after December 15th, 2017. So anyone now almost. So we're dealing with a lot of June 30th year ends. So those will be impacted right now.
Okay, so it's here now. So if you're dealing with this, if you need some help understanding it further, we want you to reach out to Team LGA and we'll help you through it.
Happy
Thank
to.
you.
Thanks.